Hey guys, so in this video, I'm gonna cover different types of properties that you can buy and you can invest in. I'm also gonna give you my take on those as you're going through them to give you some different angles on how this might be a good investment property and different things you can do with it when you look for this type of a home to buy. The first one up is condo. Now, a lot of people will buy a condo as their first property. The reason they do that is because they're a lot less expensive and they can afford it as a first-time home buyer. And you know what I'm talking about. It could be a townhouse, it could be something that's attached to another building, just because construction costs are a little bit less expensive on something like that. So the purchase price is less expensive as well. Obviously, as we know, most people don't live in there the rest of their life because they want to move out and eventually get into a single family home that has a yard, they have more privacy and different things like that. So as you're looking to buy a condo for an investment property, a few things that I would consider. I own a condo right now, but it's a vacation rental. It's a condo in a ski town. And it's been great for me because there's an HOA, which is something to be aware of. Make sure you run your numbers with the HOA included. But that HOA for me has been worth it because it covers TV, it covers snow removal. There's a hot tub up there and it covers all the maintenance on the hot tub. So it makes it really nice to be able to rent it out. But I also had to factor that into my numbers to make sure it's a good deal or not. So something always to be aware of. You're gonna have these different amenities within a condominium. It might have a pickleball court, it might have a swimming pool, might have a gym, all these things that can help you as a landlord when you're renting it out because people want to stay there and want to rent it from you. But just realize it's going to cost more. Just realize it's going to be a little bit different renting in that area. You're going to have to make sure that they allow that. A lot of times you have to be an owner to live there. You can't rent those out, especially if you're going to look at it as short-term rentals. They'll put the block on that. So just different things to be aware of, to think of. Just because they're priced less than other houses and other homes, it doesn't mean that it necessarily is the best buy. This is one of the mistakes I see people make all the time, and they just look it off of price and they base it off of price. And I'll give you an example of that really quick. I had somebody call me the other day and say, hey, I'm looking at this condo. I want to buy it because it's $250,000. They only approved me for $260,000, and all of the homes in my area are $380,000, $400,000 just to get into a house. So I really want to buy a home. I don't want to keep on waiting and paying rent, but my only option is to buy this condo. So I think I'm going to go ahead and buy it. He's like, the problem is if I buy it, my mortgage is going to be $1,200, and the most I can rent it out for is $1,300. And I want to buy it as an investment property. Is this a good investment? You guys already know my answer to him was, yeah, don't buy it. It's not a good investment. You're only cash flowing $100. It's not worth it in my mind. What I think is a better option and an alternative to this scenario is go in and buy the house even though it's more money. This person was single, right? Can they live in a bedroom and rent out all of the rooms? Can they get help qualifying for something like that? Can they look at buying a duplex and living in one side, renting out the other side? And because the other side has a long-term history of being rented out, even though it's going to cost more money, they can get help in qualifying for that because that's not going to count towards their debt to income ratio, because they can count some of the rent. About 75% a lot of times of the rent that the tenants are paying cannot count against him when going qualifying for that home. So different ways of thinking about things a little bit differently. So that's my best piece of advice when looking at condos. They can be a great way. A lot of people that are going to buy a condo, ways I've seen it work is they'll rent it out by the room. If they're single, they'll rent out maybe the master bedroom. It has its own separate entrance. A lot of people like that. But there you have it for condominiums. Next up is just single family homes. So a single family home, obviously we touched on it just a little bit. A lot of people like living there because you have your own yard, you have your own garage, you have your own space, and it's a great way to kind of level up from living in an apartment for a lot of people. Now, a lot of these homes can be great investments just by simply buying them for the right price and renting them out to a family. Now, a few things that you should think about or look into, and this is why I usually don't go and buy a single family home unless I can get creative with it and think about it a little bit differently. What I mean by that is typically if I'm not going to get a screaming good deal, if it's an okay average deal on a home, I'm usually not going to be able to buy that home. And let's say my mortgage payment on it's $1,000. Maybe I can rent it out for $1,200, maybe $1,250, but usually that's about max. And you guys know what I'm talking about because this is one of the biggest questions that people have when diving into real estate investing. They're going to say, hey, I got this awesome house, but I want to buy it. But the problem is I'm not going to cash flow very much money on it. And it's so common. And for me, the reason why I don't get super involved in these is because what ends up happening is if I'm only cash flowing a few $100s, something happens or something goes wrong, then automatically any money that I've gotten from there is gone. I don't have extra reserves. What happens when the market tanks, right? What happens when rent drops a little bit? Now I go from making a little bit of money to having to pay money each month. And that's not a situation I ever want to be in. Instead, what I look for in these single family homes is different ways to make my $1,000 mortgage payment, and I want to bring in $2,000 a month to where I'm cash flowing $1,000. Okay. And that might seem over the top, might sound crazy, but that's what most of my homes do. They actually do more than that. All my single family homes do more than that. And the reason being is that I've gone about it a different way. I've looked at the zoning when I bought it and I've turned it into a duplex and rented out the basement. I've converted maybe a master bedroom and added in like a studio and Airbnb'd that. I've Airbnb'd the entire house as a whole, and my fallback plan was to rent it out to college students. If that didn't work, my fallback plan is to rent it out to a family. My go-to is single family homes, and you guys know this already, is to find them very, very close to the college. Look for homes that have more bedrooms or have less bedrooms, but have maybe an additional space, have a basement that's unfinished, or maybe they have an additional family room and I can add more bedrooms. Like, this has been huge for me, and you can cash flow so much money by doing this. You're just thinking about it a little bit differently. A lot of times these single family homes, go look up the zoning for them. Look up the city that you invest in a lot. Go to the city website, download the zoning map, and look. You're gonna know, okay, in this area, these are all zoned R2. These are zoned R3, right? R3 is you can have multiple units on the property, assuming it fits with the setbacks and parking and all that. R2, you can have 2 units on the property. And so a lot of these homes, you think they're in this just normal neighborhood, but they might all be zoned R2, where you can easily in the back build an addition. You now rent out that casita in the back, and it takes this mediocre investment of cash flowing a couple $100s to now you're over that $1,000 mark because you financed that piece in the back, your payments on the studio that you just built, the casita that you built, versus the rent that's coming in. You're making way, way more rent, so it makes it worth it, right? So just a few different things to consider, to look at a little bit differently when you're looking at single family homes. It doesn't mean that they don't work, right? They work great, but for me, I would not buy it just based on the fact that it's only cash flowing $100 a month and it's making the payment and someone else is paying that principal pay down. It's great, it's good, unless I got into it with none of my own money, then that's one thing. But I wouldn't dive into those just because one thing goes wrong and all of a sudden it's costing you money to own it rather than being a passive income producing asset. Next up is a duplex. We're just gonna go ahead and classify duplex, triplex, and fourplex all in one together. The nice thing about these is they're all qualified as a residential type property. So you can go get a residential loan. You can go get an owner occupied loan for 4 units and under. What's so awesome about this, and this is the most common way to do it, is you buy it, you live in 1 unit, and you rent out the others. The nice thing about this is not only are you saving each month, so you don't have to actually pay a mortgage payment, but you're also collecting cash flow. You get into it with a low down payment. So when you move out, you rent out your spot, either your room or your unit. And now what you can do is rent the place out that you were in, making even more money and even a greater return than you were already making. So one thing that this is common for is, real estate investors are always looking for a duplex or a triplex or a fourplex, and they think that just because it's a fourplex, you can make all this money on it, right? When reality is, like, it all comes down to the numbers. You might be able to make more money on a single family home because you thought about it a little bit different and you got creative, versus a duplex. You might be able to make more money on a duplex versus a fourplex. Just because there's more units involved, it doesn't necessarily mean that it's a better buy. A commercial property is going to consist of 5 units or more. As we dive into commercial properties, there's a lot more flexibility in financing, and we'll dive into that a little bit later here. But it opens up a lot more options. Your business can go qualify for a commercial loan. You can partner on these things. You can do different things to go take down these big deals. And apartment complex can be great. They're really hard to come by. They really are, in the right location, just because they're great investments to have. But once again, it comes down to the numbers. It comes down to making sure the numbers work on it. If you can go take down a deal and you know the ins and outs of it, just be aware there's going to be different things than residential. There's a lot more options, which can be a good thing and it can be a bad thing. You usually have interest rates that are a little bit higher. Your terms aren't as long. You usually can't drag it out for 30 years, which means you're going to have a lower down payment. Most of the time, the max they're going to is 25 years. More typical is like 20 years. So what that means is your payment's going to be a little bit more because you're paying it off a little bit sooner. So a lot of options when we look at commercials and investing in apartments. And that's one of the reasons why we talk about syndicating these deals or starting a fund to go and take down these bigger deals. If you have a couple $100,000 set aside to go put down on a property, that's great. That's awesome. You can go take down an apartment complex on your own. Great, amazing. As you dive into these with more units, obviously just being aware there's more liability. There's other things that you might have been able to get away with self-managing your residential portfolio, but now you just went to 50, 60, 70 unit buildings. It's gonna take a lot more work and a lot more management to make something like this work out. But the upside is also a lot higher as well. Another type of property that a lot of people invest in is retail space. Office space, places that businesses are going to come and rent, and it can be a great investment. I know a lot of people have made a ton of money this way. One reason that for me it's not one of my forefront focuses is because what have we seen recently with COVID? A lot of people went back to their homes to work from their home offices because they realized, hey, I don't actually need this office space. I don't actually need to pay for this. If I don't have to pay for it, I can work from home, then I'm gonna do that. And so housing is one thing. We're always gonna find a way to pay our rent because we always need a roof over our head. But when it comes to office space, that's something we don't always have to have, right? We're gonna let that go before we're gonna let our personal roof over our head, before we're gonna let that mortgage go. So that's just for me personally, but a lot of people can make a lot of money this way. Another form of investing is storage units. A lot of people love storage units. I'm not going to spend a ton of time on this, but it's a great way to invest your money, mostly because it does well when the economy is good, and it also does well when the economy is bad because people need places to store their things. And so it's one of those things I call recession resistant, just because it doesn't matter the type of economy we're in. It's always a safe bet and a safe place to put your money. That goes along with RV parks as well. For whatever reason, they do well in a good economy, and they also do well in a bad economy. And so for whatever reason, people sell their house to save some money and they travel in their RVs. It's the same thing with mobile home parks. Mobile home parks are great because they're towards the bottom of the barrel, which means like to get into one, it's one of the lower class type places to live in. Not all of them, but majority of them. And that's not always a bad thing. That can be a good thing because it means when things are bad, people that are going from A class type properties move into B class type properties. People that were living in the B class properties move into C class properties. And so you don't want to be stuck investing in these top of the line luxury apartments or homes. And then when things hit and go bad, everyone's going to move out and they're going to downgrade. So if you're at the bottom, people are downgrading to you, you're still going to be fine. You're still going to have things rented out. Okay, the last one we're going to touch on is land. Obviously, you'll see a lot of people that will buy land. It's usually usually more so passive investors that have a lot of extra money. They'll either buy the land and develop it. You'll hear about developers, and you can make a lot of money developing land. They'll buy a big chunk of property, they'll cut it up into smaller pieces, and it can be really expensive to do that because you got to run all the utilities. And if they do it the wrong way, a lot of people have lost their shorts in trying to develop a piece of land. But it can be a really, really good form of investment. A lot of people will buy lots and sit on them, wait till the economy's doing great, and then they'll sell them then. There's nothing wrong with that whatsoever. There's a reason though that I stick to what I like to invest in, and it's a good way to build safe passive income that requires a lot less of my own money. Not that I don't think it's a good idea to buy a lot and just sit on it for 5, 6, 7 years, but let's say this lot cost you $100,000. Well, your minimum down on that lot is gonna be 20% most of the time. So I have $20,000 invested in this lot, and maybe 5, 6 years from now when the economy's great, maybe I could get $200,000 out of it. Amazing return, but what am I losing out on? That $20,000 that's been sitting in that land, like where could I have invested that into another property that could be cash flowing throughout those 5 years and getting appreciation at the same time? So those are all the things that I personally look for, and I would suggest you guys do the same. Just be aware of these things. But I really hope this was helpful for you, just to kind of get an idea of different types of properties that you can invest in. A lot of times they think of, hey, I'm going to go buy an investment property, I'm going to go buy a rental property, and we only think about a single family house. I'm going to go and invest in a house and buy it. And what are rents? Okay, rents are this, and I can buy it for this, and my payment's this. Okay, yeah, I'm gonna make a couple $100s a month. I'm gonna go get into real estate. I just wanna open your guys' mind saying, hey, there's other ways to go double, triple, quadruple the returns that you would typically get just from looking at other types of assets and thinking about it a different way and getting a little bit more creative. Hopefully that got you thinking and inspired some thought, and it's gonna help you get high returns as we continue building your own passive income.